Morning students, welcome you all on the second lecture on Ind AS 116. So students, yesterday we have discussed that why this Ind AS 116 is there, right? And we have understood that Ind AS 116 is an outcome of IFRS 16, right? And IFRS 16 was an outcome of Financial Accounting Standard Board and International Accounting Standard Board joint project, okay? Which they have started in 2005, and globally IFRS 16 was introduced in 2016, effective from 1st January 2019. In India, it is effective from 1st April 2019. And we have also understood why this standard. This standard is a substance based standard where if someone is taking some asset, lessee is taking some asset on a lease basis, probably lease is a second form of financing. It is another form of financing. And probably that person, instead of taking a loan directly from the bank or from a financial institution, that person is getting an asset on a loan basis, I would say, right? So in this case, he is getting a right, and this right should be capitalized. So friends, we have discussed that in Ind AS 116, there is no concept of operating lease and finance lease like AS 19 or earlier version of leases standard, which is Ind AS 17, right? In Ind AS 116, from the lessee perspective, there is no classification of operating lease and finance lease. Every lease is a lease, provided some condition needs to be satisfied, and the lessee is required to recognize right of use asset and leasehold liability. The accounting is pretty similar what we were doing earlier in terms of finance lease accounting in the books of lessee, right? Where lessee was recording the leasehold asset and the lessee was recording the leasehold liability. Okay, friends. So we understood this aspect, and when the lessee will recognize right of use asset and the lessee will recognize leasehold liability, of course, it will be on the basis of present value of future lease rental, which we are going to discuss while discussing the initial measurement and initial recognition of right of use asset and leasehold liability in the books of lessee. Before that, we have understood some important concept, and we talked about the objective and scope of the lease standard, right? And we have discussed about that where this standard is applicable. So this standard is applicable to all kind of leases, except there are some exceptions given in this standard, right? Then we discussed the definition of a lease in detail, right? And we know that for any agreement to become a lease, there must be two or more parties. There must be an underlying asset. There must be an consideration, right? If an asset is given a free of cost, right? For example, A Limited has given an asset on a lease basis, but there is no consideration. In that case, there will not be any lease contract, right? The lease contract will be there only when there is a lease payments. Okay. So consideration should be there and time period is important. So friends, the parties are known as the lessor and lessee. And we have understood yesterday that our accounting standard definition says that when there is a right to use of an asset, but instead of right to use, the concept is right to control the use. You are controlling the use. And I have taken a very layman language example where I have given my car to my friend Viraj, right? And I have said that Viraj, please use this car. But I have imposed so many conditions, right? In that case, although I have transferred the right to use, but I have not transferred the right to control the use. I am controlling the use, which Viraj is doing, right? But if I talk about, of course, Viraj has the position of that car, Viraj is using that car. So right to use has been transferred, but right to control the use has not been transferred, right? So friends, in Ind AS 116, the concept is right to control the use. And the second concept is not asset, it is identified asset. And we have discussed that what is meant by identified asset. Identified asset are those assets which are explicitly or implicitly mentioned in the contract. If the lessor has a substantive substitution right, SSR, if the lessor has a substantive substitution right, in that case, you cannot call it as an identified asset. Sir, when can we know that the lessor has a substantive substitution right? In two conditions. One, the lessor has a practical ability to substitute the alternative asset throughout the period of use. And I have taken so many examples yesterday. You can go through the recorded video again to do the revision or again to understand this standard, right? Second, by replacing it alternatively, by replacing the asset with the alternate asset, the lessor must be benefited. For example, if if the lessor is replacing a car due to the breakdown, due to service requirement, due to repair, due to the damages, right? In that case, lessor is not getting any benefit from the replacement of the car. He is obliged to replace the car because the car has breakdown, right? The car got broke down. But at the same time, if the lessor has a very latest model, right, and the lessor is replacing that car with the older version of the model, and the new model the lessor is giving to someone else for getting a good amount, right? In that case, the lessor is economically benefited from doing so. Okay. So friends, if agreement is silent, okay, then what you will consider? If agreement is silent or question is silent about the substantive substitution right, in that case you should consider that substantive substitution right is not available. It means that asset is an identified asset. Okay. I hope it is clear. Yeah. Then I have covered so many illustrations from the ICI study material as well. And friends, then we have discussed the concept of right to control the use of an asset. And where we have discussed the first condition, the lessee would be benefited substantially. The lessee has a right to obtain substantially all the economic benefit from the use of the asset, not from the ownership of the asset, from the use of the asset. Okay. Sir, what is meant by from the use of the asset? For example, friends, let's say I am a lessor and I own a house property. Okay. And the rate of my property is going up regularly. Okay. So since market value is going up, and that's why my property prices are also going up, this benefit I am getting as a owner of the property. But in that property, for example, a production is going on and this property has given on a lease basis to B Limited. Okay. So that B Limited is enjoying the outcome. B Limited is enjoying the production from the use of that building, right? Or whatever benefits from the use of that building, whatever benefits are there, the benefits have been passed on to the B Limited substantially. Okay. So friends, you need to look at that the right to obtain all the benefits substantially, right, from the use of the asset, whether it is passed on, then you can say that yes, right to control the use is there. Plus, right to direct the use of an identified asset must be passed on to the lessee. Right to direct the use means lessee will decide how to use the asset and for what purpose the asset will have to be used, right? Sir, if the agreement is 10 years and this right to control the use of an asset is only for the first 6 years, in another 4 years, lessor will decide how and what. In that case, sir, what is the lease contract? The lease contract is only for the first 6 years, right? It means when you will recognize right of use asset and leasehold liability, you need to consider the future lease payments, because like a finance lease accounting, you have to discount the future lease payment and you have to recognize the asset, right? So in that case, you have to consider only 6 years. The 4 year where the right to control the use of an asset is not there, you will not consider 4 years. And after 6 years, whenever the rent will get accrued, you have to debit it in the P&L. This right of use asset and leasehold liability accounting will not be there. Why, sir? Because it will be outside the scope of Ind AS 116. Why? Because the right to control the use of an asset will not be there. For getting an asset into lease contract under Ind AS 116, first condition, there must be an identified asset. Second condition, there must be transfer of right to control the use of an asset. Third condition, there must be consideration. Fourth condition, there must be a lease term, right? So these are the conditions for converting a contract into a lease contract, right? Then we have discussed some examples for this lease term, sorry, for this lease contract right to control the use of an asset. Then we discussed inception date of a lease, right? Inception date is a date when the lessor and lessee first time decide whether it is a lease or not, right? And inception date is a date where the principal terms and condition will be satisfied. Okay, sorry, principal terms and condition will be finalized. Okay. Now, friend, let's discuss one of the important aspect, which is lease term, because this entire lease accounting is depending on the lease term and lease payments, right? Because lease term is something over the which you have to do this 116 accounting, and lease term is something over which you need to do the discounting, and lease payments are something which is required. Lease payments are something which is required for considering. Lease payments are something which are required for considering the discounting. Okay, because if you are not aware about the lease payment, what value you will discount, for which value you will calculate the present value, right? So let's understand the lease term definition. Friends, what is meant by lease term? Lease term means a period for which the lease contract is enforceable, or the lease contract is there. Okay, it's a non-cancelable lease period. Yeah, I can see a lot of participants, a lot of students. So good morning, Mansha, Viraj, Namrata, Radhika, Purvi Ben. Good morning to all of you. Lease term is a non-cancelable period. Non-cancelable period. What do you mean by non-cancelable period? Non-cancelable period means not cancelled, means it is not cancelable. Non-cancelable period means if the party will cancel the period, the party has to pay the penalty. That's all, right? For example, I have entered into a contract with my landlord, okay, for a period of 3 years. And 3 year out of 3 year, 2 year is my non-cancelable period. After 2 years, I can give a notice of 1 month and I can walk away from the contract. And my lessor can also walk away from the contract after giving a notice of 1 month to me. But for the first 2 year, doesn't matter whether I'll use that property or I'll not use that property. For example, after 1 year, 2 months, I have decided to move from that property. So my lessor will say, your 2 year period was a non-cancelable period. Then Mr. Alok Garg, you have to pay the rent for the balance period of 10 months. You have to pay the rent for a full period of 2 years. Right? Is that clear? Or my landlord, my lessor is saying that, see, I got a good tenant. Good tenant means more paying tenant who is paying me more money. So you need to leave this property. So after 1 year, my lessor says me, my lessor told me that Mr. Garg, you have to leave this property. You have to vacate this property. So I told him, see, the agreement is 2 year period. It is a non-cancelable period. You need to pay me a rent of next 1 year if I have to vacate this property right now. Right? So friends, first of all, if we talk about lease term is a non-cancelable period for which the lease contract can be forced. Okay. Now, this lease period consists of 4 items. Number 1, this lease period will start from commencement date, right? This lease period will start from commencement date. And this lease period is a non-cancelable period. It starts from commencement date. So it will be a non-cancelable period plus rent-free period. For example, the total period is 5 years. 3 year is my non-cancelable period. After 3 years, I can walk away from the contract. Or let's say the first 6 months are the rent-free period. If you have done the auditing, or if you have audited the malls or real estate, right? So you must have seen that these malls are giving a 6 months rent-free period or 3 months rent-free period as a fit-out period, right? For example, if you have seen the showroom of Adidas, Decathlon, Reebok, right? You must have seen that these outlets are spending 3 months, 4 months for their renovation, right? For the fit-out. So this rent-free period is a period where moratorium is there, where rent is not required to be paid. So if in the contract any rent-free period is there, it has to be considered as a lease term, right? Non-cancelable period is a period where the lease cannot be cancelled. Where the lease cannot be cancelled. Okay. So non-cancelable period plus rent-free period plus optional renewable period, ORP, optional renewal period. For example, the total agreement is for a period of 5 years, and this 5 year include rent-free period and non-cancelable period. And the lessor has given an option to the lessee that after completion of 5 years or at the end of 5 years, I'm giving you an option to renew this lease for a period of another 2 years, right? And the lessee is reasonably certain that the lessee will renew the lease. How can you say that the lessee is reasonably certain on the commencement date? Today, the lessee is reasonably certain that I will avail the renewal option. Why? Probably in the contract, it is written that if the lessee will renew the lease, the renewal rent will be 20% discount from the market rent, right? If the lessee has to continue the business, the lessee has to have the premises to run the business. And if in the contract it is written that whatever market rent will be there, the lessor will give a 20% discount on the market rent. Of course, it is a, you can say that the lessee is reasonably certain that it will avail the renewal period. Or if I talk about Mumbai, in Mumbai, the lease term are very small term, like 1 year, 2 year, 3 year. For example, if there is a chartered accountant firm, right, which has taken a lease premises on a rental basis, and the lease rent is 50,000 rupees per month, and that chartered accountant firm has invested or spent 50 lakh rupees or 1 crore rupees into the renovation of the office, into the leasehold improvement. So if the chartered accountant firm has invested such a huge amount and the lease period is only 2 years, then probably there is an understanding in the background that of course the lessee will renew that, because lessee has spent a huge amount of money, and when lessee will move from this office premise to another office premise, the entire leasehold improvement will be scrapped, right? So it is a reasonably certain that yes, lessee will avail the option if lessor has given the option, right? So if there is any optional renewal period and there is a reasonable certainty that lessee will exercise that option, that optional period, that secondary period is also combined with the primary period to ascertain the lease term, right? Plus, I want everyone to please write down this equation: non-cancelable period plus rent-free period plus optional renewal period plus optional termination period. Period covered by an option to terminate, right? Optional termination period. If lessee is reasonably certain that it will not exercise the optional termination period. For example, so in ORP, reasonably certain to exercise. When you will consider optional renewal period? When reasonably certain to exercise, optional termination period. When it need to be considered? When reasonably certain not to exercise, reasonably certain to not to exercise. For example, I am a chartered accountant and I am a practicing chartered accountant, let's say, and I have taken my office on a rental basis. The total agreement is 9 years. Out of 9 years, the lessor told me that Mr. Garg, you have to be in this office. I mean to say, you have to pay me a rent for the next 6 years. It is a non-cancelable period, but last 3 years is an optional termination period, right? If you want to walk away from the contract, there is no any problem. You can just give me 1 month notice and that is okay, right? You can vacate this office. It means out of this 9 years, the last 3 years is an optional termination period. Now the question arises for all the practical purposes in the exam and in the practical life, whether the lease term should be 6 years or 9 years. In that case, you need to consider that the last 3 months optional termination period is there, but if the lessee is reasonably certain that it will not exercise the termination option, in that case, this optional termination period is also included in the lease contract. So in that case, 6 year is a non-cancelable period plus 3 year will be optional termination period, which has to be taken into consideration while finalizing. Here is optional termination period. But again, lessee has done a lot of leasehold improvements, right? And after 6 years, the lessee is entitled to get a discount, right? So there are some factor which entails that the lessee will not avail the optional termination period and the lessee will continue this lease for a complete period, right? So friends, again to summarize, non-cancelable period, right? Lease term is a non-cancelable period plus rent-free period plus optional renewal period if the lessee is reasonably certain that it will exercise that option, plus optional termination period if the lessee is reasonably certain that it will not exercise the option, right? Is that clear? Is that clear? Now I'll cover that. Now friends, let's discuss this illustration number 16 and then we will discuss some more juggleries of termination period. Determining the lease term. Entity ABC enters into a lease for equipment that includes a non-cancelable term of 6 years. What is non-cancelable term? In scenario A, non-cancelable period is equal to 6 years. And a 2-year fixed price renewal option with future lease payments that are intended to approximate market rates at lease inception. And there is a 2-year renewal option with future lease payments, right? So there is a renewal option for 2 years, and that renewal option, the rent in the renewal option is approximate to the market rate, okay? That are intended to approximate market rate at lease inception. There are no termination penalties or other factors indicating that entity ABC is reasonably certain to exercise the renewal option. What is the lease term? So in this case, there are no termination penalties. If the lessee has to walk away from the contract after 6 years, there is no termination penalty, or there are no other factors which shows that the lessee is reasonably certain to exercise the renewal option. So friends, in this case, non-cancelable period is 6 years. Rent-free period, there is no rent-free period, 0. Optional renewal period is 2 years, but there are no any factor which shows that the lessee is reasonably certain to exercise the option. So in this case, optional renewal period is not considered. Optional termination period is nothing. So the total lease period is 6 years in this case, right? Janvi is saying, sir, what is the difference between optional renewal period and optional termination period? Janvi, if the contract is for 6 years, in that contract, for example, the contract is for 6 years, and within 6 years, let's say non-cancelable period is 5 years, and after 5 years, you can walk away from the contract. That last 1 year is an optional termination period. So termination period is a part of the total lease period, okay? But optional renewal period comes after this primary lease period. For example, again in the same example, the lease period is 6 years, but there is an option. The lease period is 6 years, right? And in the 6 year, 5 year is my non-cancelable period. 1 year is my optional termination period, right? And the lessor is also giving you an option that after expiry of 6 years, you can avail a renewal option of 3 years or you can avail a renewal option of 3 years more. So that is a optional renewal period. Optional renewal period comes after the first lease period. but termination period is generally within the lease period. If you have something, then only you can terminate, na? I hope this ORP and OTP is clear to all of you. Is that clear? OTP. What is OTP? One-time password? No. Optional termination period. It is not one-time password. Janvi, is it clear? Thank you, Rahul. Thank you so much. Yes. Now coming to scenario B. Entity XYZ enters into a lease for a building that includes a non-cancelable term of 8 years and a 2-year market price renewal option. 8 year is the lease period, non-cancelable period is 8 year, and the lessor has given an option for the another 2 years on the market rental. Before it take possession of the building, entity XYZ pays for leasehold improvement, and the entity XYZ has done some leasehold improvement, has done some renovation in the rental premises. The leasehold improvements are expected to have significant value at the end of 8 years. And that value can only be realized through continued occupancy of the lease property, even at the end of 8 years, which is the primary lease period. This leasehold improvement will have a significant carrying value, and that value can only be realized when the lessee will continue the occupancy of that property. It means, in this case, non-cancelable period is 6 years, right? Rent-free period, nothing. There is no rent-free period in this question, right? Optional renewal period is 2 years, and if you will see the condition, it is reasonably certain that the lessee will exercise the renewal option. Why? Because there are significant leasehold improvement, and this significant leasehold improvement value will be significant even at the end of 8 years, right? And optional termination period, which is again 0. The total lease period is 8 years. The total lease period is 8 years. Okay. Scenario C. I hope it is clear to everyone. It is a bit self-explanatory. Yeah. I hope it is clear to everyone, guys. Thank you, Namrata. Scenario number C. So scenario A, scenario B, now coming to scenario C. This is a very good illustration, I would say, to understand the lease term. Non-cancelable period, rent-free period, optional renewal period, optional termination period. Entity PQR enters into a lease for an identified retail space in a shopping center. The retail space will be available to entity PQR for only the month of October, November, and December during a non-cancelable term of 7 years. The lessor agrees to provide the same retail space for each of the 7 years. What is the lease term? See, in a mall, there is a shop, right? And probably you must be wondering, sir, how can it be possible that in the contract of 7 years, the lessor is giving him a dedicated space, identified space, only for the 3 months, October, November, December. Probably it could be a outlet which is into woolen clothes. Probably, yes, right? You must have seen that in the mall. There are some Bhutanese or Tibetan people who are always used to sell this woolen clothes in the winter season, right? They occupy a dedicated space and they used to sell the clothes or garments or whatever in 3 months or 4 months of the winter season. So likewise, this entity PQR enters into a contract for identified space, and this space will only be available in this case. Yeah. The lease term is 21 months, right? It is 21 months because on this 21 months only, this entity has a right to use the identified asset. Yes. Oh, I think my PPT is not visible. Yes. In this case, I think it is visible now. In this case, the lease term is 21 months. 7 just a minute. In this case, the lease term is 21 months. 7 into 3 months is equal to 21 months. Why? Because the identified asset is there only for the 21 months, right? Only for the 21 months. Okay, scenario B. Yes. My bad. It is missed from my side. In scenario B, it is 8 years. It is not 6 years. It is 8 years in scenario B, and this will be the total 10 years. Okay. Yes. Yes. Right. So in the first case, it is 6 years. In the second case, it is 10 years, 8 plus 2. In the third case, it is 21 months. I hope this all scenarios are clear. Now, friend, let's discuss the concept of termination, of optional termination period. Sir, for considering the optional termination period into the lease period, into the lease term, whether we need to look at that the termination option is available with whom? Yes, you have to look at. If the termination option, if the termination option is with the both parties, if the termination option is both the parties. When I'm saying termination option is with the both the parties, means without any penalty, any party can terminate from the contract, right? It means the contract no longer remain foreseeable. Friends, what is the definition of a contract? The definition of a contract is an agreement enforceable by law, in agreement enforceable at law, right? Section 2, subsection H of Indian Contract Act defines the contract. When a contract will be enforceable, the contract will be enforceable when a party can force other party to comply with the contract. And when a party will force the other party to comply with the contract, and the other party is obliged to the contract, because only when there is a penalty involved in that, right? So friend, standard says that if both the parties have a right to terminate, if both the parties have a right to terminate, in that case, optional termination period should be ignored, right? Optional termination period will not be taken into consideration. For example, the entity has entered into a lease contract for a period of 6 years. Initial 4 years are the non-cancelable period, but after completion of 4 years, any party can walk away from the contract, any party can terminate the contract. In that case, the lease term is 4 years only, the lease term is not 6 years, right? If only lessee has the option to terminate the contract, if only lessee has the option to terminate the contract, right? Tell me what will happen if only lessee has the option to terminate the contract? In that case, you need to see whether there is a reasonable certainty that the lessee will recognize the option. I mean to say, not avail the option. If the termination option is available to the lessee, so whether there is a reasonable certainty that lessee will not avail the termination option and lessee will continue with the occupancy. Is that clear? So if the termination period, if the termination option is available only to the lessee, in that case, optional termination period will be added in the lease contract when there is a reasonable certainty to not to exercise the option. मतलब termination period का option exercise नहीं करेगा lessee. Why not? Because probably the lessee has done a huge leasehold improvement, right? The lessee is getting benefited for the period which he will continue in future by the concessional market rentals. Okay, so these could be the scenario. Or lessee has already entered into some future contracts where the lessee has given the address of the current premises, or lessee has entered into some obligation which says that okay, lessee will avail the renewal option will not avail the termination option and lessee will continue in future. I hope this is clear. I hope this is clear. Is it clear in mind or is it clear from mind? What is that? Is it clear in mind or clear from mind? Sir, what happens if the lessor has the option? Friends, if the lessor has the termination option, you are looking at from the perspective of the lessee here, right? When you are looking at the lease term from the perspective of the lessee, and the termination option is only available to the lessor, in that case, this optional termination period has to be added in the leasehold period. This has to be added. I mean to say, if the termination option is available to the lessor, it has to be ignored completely. It means that the lessee does not have the option to terminate. So whatever total period is there, lessee will comply with that. Right? Clear? Okay, very good. If both the parties have a termination option, then the optional termination period is not to be considered. If the lessee has the termination option, it has to be considered in the lease term, provided there is a reasonable certainty to not to exercise the termination option. If the lessor has the termination option, in that case, the lessee will consider that lease term, because from the lessee perspective, of course, yes, there is no termination option, right? So in the same example, if 6 years is the total lease term, after 4 years, the 2-year option is only available to the lessor. In that case, for a lessee, the lease period is 6 years, not 4 years. Right, friends? Suppose the term of a contract is 10 years and the non-cancelable or lock-in period is 6 years. In that case, the lease term shall be as follows. If termination option is only available to the lessor, then the lease term is a complete lease term, 10 years. If termination option is available with the lessee, the lease term shall be 10 years, assuming reasonable certainty to not to exercise the option. If it is with the both the parties, then the lease term will only be 6 years, right? This 4-year termination option has to be ignored. Namrata, is it clear? Right, friend? Is that clear, friends? Reassessment of, sir, we understood lease term. We understood the meaning of lease term. Sir, whether the lease term is required to be reassessed also, for because lot of judgment and estimate is involved, because you told us lease term is a non-cancelable period, which is very simple, right? Because in every contract there is a non-cancelable period, which is mentioned in the contract. Plus rent-free period, we understood, sir, because if a period is rent-free, then of course lessee will use that period. Okay, that is also understood, and it was always mentioned in the contract. Sir, you have also told us to add optional renewal period. Again, it is a matter of judgment. Optional termination period, again, it is a matter of judgment, right? So whenever judgment and estimates are involved, probably, yes, you need to reassess the lease term on a regular basis, right? So at the lease commencement date, Ind AS requires the lessees to monitor leases for significant changes that could trigger a change in the lease term, right? For example, friends, I have seen that. So prior to COVID, there was a long-term contracts for 10 years, 15 years, 5 years of the leasehold rental of the lease premises. So after COVID, the property prices have badly been impacted and the rental has gone down, right? So the company has shifted from, if the lessor or the landlord is not willing to provide the price concession or to decrease the rent, the companies have shifted to the other premises where the rentals are very low, right? Or, so this is kind of a situation where one has to assess the lease term, right? Reassess the lease term, okay? Because there are significant changes happening either in the economical environment or from the front of the lessee. For example, the lessee business was earlier great. It was flourishing. But now the lessee business is in danger, or let's say, I would say, the lessee business is continuously going down. So there may be a situation where lessee will not be able to oblige the long-term contract, and it may assess the total lease term. Probably earlier you have considered that the lessee will avail the renewal option, but now the situation says that lessee will not avail the renewal option. Okay. Or earlier the situation says that the lessee will not avail the termination option, but now it seems like the lessee will avail the termination option, right? So friends, standard says that the lessees are required to reassess the lease term upon occurrence of a significant event or a significant change in circumstances, right? Which is within the control of the lessee. I mean to say, when you are reassessing lease term, you are only considering from the perspective of the lessee. Even while considering the lease term, you are considering from the perspective of the lessee. आप तो अपना ही बता सकते हो ना कि आपके हिसाब से reasonably certain है या नहीं है, right? Clear? So first, that situation should be within control of the lessee. Second, if it has affected whether lessee is reasonably certain to exercise the renewal option, not to exercise the termination option, etc., etc., right? So because of these judgment regarding ORP and OTP, the reassessment has to happen in case of any significant event, right, friends? And the lease term has to be changed. Sir, what will be the impact of change in lease term? Of course, your accounting will change, right? You understand that? You understand that? You understand or not understand? Understand that? Okay. Revision of a lease term. If the lessee exercises an option, right, not previously included in the entity's determination of the lease term. Earlier, lessee was not sure that he will avail the option for renewal, but now he want to exercise this option, right? So it means there is a change in the lease term. If the lessee does not exercise an option which was included in the lease term earlier, ORP was included, optional renewal period was included, but now he don't want to avail that option. An event occurs that contractually obliges the lessee to exercise an option. An event occurs where the lessee is contractually obliged to avail that option. For example, the lessee don't want to avail that option. Lessee has entered into an agreement with the government or regulator, with the government parties, and that agreement says that the lessee cannot change its official address. The lessee cannot change the premises for the next 5 years. Due to this contract with one of the regulator customer or one of the government customer, the lessee is contractually obliged to avail the optional renewal period. Or an event occurs that contractually prohibit the lessee from exercising an option. For example, the lessee was having a office on the 8th floor, right? So the government has announced an airport in the vicinity of that office area. And as per the aviation authority rules, for example, within 1 kilometer of the airport, there should not be any building which is more than 4 story. Of course, in that case, the top 4 floors has to be demolished. Of course, government will give the compensation to the owner. I'm not talking about that. But the point is, earlier lessee was thinking that yes, I'll use this office premises for another 10 years. But now, with this significant event, the lessee cannot continue in that property for the another 10 years. Why? Because it contractually stops the lessee to avail the renewal option, right? Is that clear? I hope things are very much clear because I have taken all the layman language examples to make you guys understand the concept, right? Yes. Let's discuss illustration number 17, reassessment of exercise of lease extension option. Please read this illustration number 17. Reassessment of exercise of lease extension option. Retailer M enters into a 5-year lease for a building floor, followed by 2 successive 5-year renewal options. Entered into a 5-year lease for a building floor, followed by 2 successive 5-year renewal options. First is 5-year, then 2 5-year renewal options. On the commencement date, retailer M is not reasonably certain to exercise the extension option. On the commencement date, the lease term is only 5 years because he was not reasonably certain that he will be able to avail the extension options. At the end of the third year, retailer M extended to include another floor from year 4 due to his business acquisition. Right? So at the end of the third year, the business is expanding, the business is growing, and this lessee has extended to include another floor from year 4 due to a business acquisition. Since this lessee has acquired a business, expanded a business, and instead of this floor, the lessee has also acquired another floor on lease. For this purpose, the lessee concludes a separate 7-year lease for an additional floor in the building already leased. Same building, the first floor, which the lessee has availed for 5 years, extension option for another 2 5 years, right? And in the inception of the contract, at the commencement date, lessee was not certain that lessee will be able to avail the renewal option. But after 3 years, lessee has acquired a business, and lessee, due to such expansion, in the same building, lessee has acquired another floor after 3 years. And lessee has entered into lease contract for 7 years. For 7 years. What does it mean? It means that there is a reasonable certainty that at least lessee will do the business for at least 7 years from now. So is retailer M required to reassess the lease term in this case? Please tell me. For the first lease of 5 years, whether the lessee, which is M, is required to reassess the lease term. What do you think? What is your view, guys? What do you mean? Yes, the reassessment is required. Why? Because if the lessee, due to the extension of the business, if in the same building, lessee is acquiring another floor as well. What does it mean? It means the lessee will continue with the existing floor as well, right? And for what period? At least to the period for which the lessee has entered into a lease agreement for the new floor. Okay. So 3 years have gone out and lessee has entered for a 7 years. It means remaining 7 years, the lessee will be in the existing floor as well. So the contract period was 5 years. So it means 5-year renewal option will be there. The lessee is reasonably certain to avail the 5-year renewal option in the first lease, right? In the first lease. As retailer M has entered into a fresh lease of another floor for a 7-year term, it is reasonably certain to exercise the renewal option of lease for a further 5-year term. Hence, retailer M will have to reassess the lease term at the end of third year, right? Very good. Yes. Friends, now we have discussed the lease term. And in the lease term, we have discussed the 4 things: non-cancelable period, plus rent-free period, plus optional renewal period if lessee is reasonably certain to exercise the option, plus optional termination period if lessee is not certain or lessee is certain that he will not exercise the option, right? Friends, then we have discussed that the termination option, if both the parties have the termination option, then this termination option period has to be ignored for the purpose of lease term. If only lessee has the termination option, then you need to check whether lessee is reasonably certain that he will not exercise the termination option. Means he will not terminate the lease. In that case, this termination period has to be added to the lease term. Third, if the lessor has the termination option, in that case, from the lessee perspective, there is no termination option, and the entire lease is what? Entire lease is lease period, right? I hope this concept was clear to all of you. Viraj. Janvi is saying, sir, for the second term of 5 years, it is not reasonably certain. Yes, Janvi. Why? Because the initial period was 5 years and the other 5 are the 2 renewal options. But after 3 years, for the new lease in the same building, the lessee has only entered into for a period of 7 years. It means the total 10-year period is certain, but another 5-year period is not certain. Right? Then what will be the remaining lease term? Okay. Viraj is saying, yes, sir, it is clear. Okay, guys. Now let's discuss about the lease payment, because until and unless, because lease payment consideration is one of the important aspect. Lease period is one of the important aspect, right? So we discussed identified asset, right to control the use, lease period, and now we are discussing consideration. Friends, there are 2 parties, right? And in like AS 19, accounting standard 19, in Ind AS 116 also, the lease payment is different for lessee and different for the lessor, right? When I say different, there are 5 items. There are 5 items which meet the definition of lease payment for the lessee perspective, and there are 6 items which meet the definition of the lease payment from the lessor perspective. Right? What are these items? Friends, lease payments, minimum lease payments or future lease payments, right? In AS 19, the word was minimum lease payments. In Ind AS 116 or IFRS 16, the word is future lease payments. You have to do the accounting on the commencement date of the lease, and standard talks about what are the future lease payments. So number 1. And I'll give you an example for that before explaining this future lease payment. I have a car, right? I have a Skoda car. And I entered into a contract with the Viraj for a period of 10 years, right? For a period of 10 years. Let's say for a period of 5 years. So I told Viraj that, Viraj, I'll lease my car in favor of you, and I'll transfer the right to control the use of this Skoda car for an annual rent of 1 lakh rupees per annum for the period of 5 years. So guys, what is this 1 lakh annual rent? It is a fixed rent. This 1 lakh rupees rent is a fixed rent, right? Fixed payment. And I told Viraj that every year, I'll increase this rent by 10%. Means for the first year, you have to pay me 1 lakh rupees. For the second year, you have to pay me 1,10,000 rupees. For the third year, you have to pay me 1,21,000 rupees. And for the fourth year, you have to pay me 1,33,000 rupees. And in the fifth year, you have to pay me around 1,50,000 rupees. Or 1,47,000 rupees. So friends, 1 lakh rupees fixed. 1 lakh rupees fixed in all the 5 years. But today, sitting on the commencement date, if I'm saying that, Viraj, every year you have to pay me 10% extra, 10% increment, 10% escalation. So don't you think that 11,000 in the second year, 12,100 in the third year, 13,300 in the fourth year, so on and so forth. This is also in substance fixed payment. This is also in substance fixed payment. Yeah. This is also in substance fixed payment. Going by the substance, the escalation is also fixed now. That escalation is also fixed. You have to pay that. right? So friends, lease payment include fixed payment plus in substance fixed payment, right? Number two, I have also told Viraj that, see Viraj, you have a purchase option also. If you want to avail the purchase option at the end of 5 years, I will charge 50,000 rupees and I'll transfer my car in favor of you for 50,000 rupees. And Viraj is reasonably certain to exercise that option because he is getting good car at 50,000 rupees only after a period of 5 years. So guys, fixed payment plus in substance fixed payment plus exercise price of a purchase option. Exercise price of a purchase option. So that exercise price is also covered in the lease payment. So in this case, what are the lease payments? Fixed payment 1 lakh rupees per month. Escalations in substance fixed payment 50,000 exercise price. These three are the lease payments. Okay. Have you understood this? Okay. Fourth, the lease term is for a period of 10 years, and in the 10-year period, the car will be scrapped almost. And the lessee has given a residual value guarantee. And the lessee has given a residual value guarantee to the lessor. Residual value guarantees by the lessee. Lessee has told that, Mr. Lessor, I'll pay you a residual value of 25,000 rupees. So if there is any residual value which is guaranteed by the lessee, that will also form part of your minimum lease payments, right? Friends, if there is a penalty for terminating the lease, right? And lessee is reasonably certain that yes, he will be liable to pay the penalties. Those penalties will also be covered in the lease payments, future lease payments. Right? Friends, to summarize what is meant by future lease payments, fixed payment plus in substance fixed payment plus in substance fixed payments, right? Second, variable lease payment which will depend on an index or a rate. For example, the lessor has entered into a contract with the lessee and it says that I will charge you a rent or I will increase your rent to the extent of increase in the wholesale price index or to the extent of increase in inflation. So that is a variable lease payment, but it is depending on an index or a rate. So that variable lease payment will also form part of the future lease payment. But standard says that if it is not depending on some indices, right, like price index, inflation rate, etc., the variable lease payment is only dependent on quantity produced, right? The quantity, numbers, right? For example, in Lakshmi Nagar, Delhi, lot of students are living in Lakshmi Nagar, right? So 3 students have acquired a 2 BHK on a rental basis, and they are paying a rent of 20,000. The landlord is saying, if your friend will come, if it will become 3 to 4, from 3, if you will be 4 guys, I'll charge you 5,000 rupees extra, only for the period in which the 4th person will stay in that flat. So friend, it is not on the basis of index or a rate, it is on the basis of the increase in the quantity. In that case, this rent will be considered as a variable rent, and that variable rent has to be taken to the P&L. It is not considered in the calculation of the future lease payments, right? So friends, fixed payment has to be considered, in substance fixed payment has to be considered, variable payment has to be considered only if it is dependent on the index or a rate. If there is a exercise, if there is a purchase option available, then exercise price of that purchase option has to be considered. If there are penalties for terminating the lease and lessee is reasonably certain that he will pay the penalty, that penalty is also that penalty is also required to be covered. So fixed payment, variable fixed payment, in substance fixed payment, variable payment, exercise price, penalty, and residual value guaranteed by the lessee. These five are the elements of future lease payments. From the perspective of the lessor, there is one additional future lease payment. These five are there from the perspective of the lessor. These five are there. Plus, if residual value is guaranteed to the lessor by a third party related or unrelated to the lessee. Apart from the lessee, if residual value has guaranteed by any third party to the lessor, so that residual value guarantee is also taken into the consideration for calculating the future lease payment from the perspective of the lessor. From the perspective of the lessee, fixed payment, in substance fixed payment, variable payment, exercise price, penalty, and residual value. These five are the lease payments, right? Let's discuss this concept with the help of examples now. Determining the fixed payments. Entity M and lessor A enters into a 10-year lease of an office building for fixed annual lease payment of rupees 2 lakh. As per the terms of the lease agreement, annual fixed lease payments comprise 1,70,000 rupees for rent and 30,000 for real estate taxes. What are the fixed lease payments for purpose of classifying the lease? What are the fixed lease payments? Friends, if you look at this thing, for example, your landlord says that Mr. X, you have to pay me a fixed payment. You have to pay me an annual fixed payment, and you have to pay me an annual fixed lease rent of 2 lakh rupees. I am charging 1,70,000 rupees for rent, and I'm charging 30,000 for taxes. What service the landlord is giving to you? The landlord is giving you a service of, using that property, right? So whatever rental the landlord is charging, that is used for using the house property. The amount which the landlord is charging on account of taxes, the landlord is not giving any goods or services additionally. So it is not a separate lease component. It means the entire 2 lakh rupees is the lease rent. Coming to the another example, if you guys are living in a society means residential society, apartments, right? Probably you are paying a maintenance. Like I lives in a society and I pay a rent and I pay a maintenance of 5,000 rupees per month. For what I am paying this maintenance? Let's say I'm paying a rent of 30,000 rupees and maintenance of 5,000 rupees. So I'm paying a rent, and for that I'm getting a right to use that property. But for maintenance, which I'm paying 5,000 rupees, I'm getting a security. I'm getting a, water facility. I'm getting a cleanup facility. I'm getting a lift facility, right? I'm getting a garden facility. So the maintenance which I'm paying, I'm getting a maintenance services, right? So this maintenance services is a separate lease component. It is not a lease component. Basically, it is a separate non-lease component. And that is why if you are paying a rent and if you are paying a maintenance, you are only saying that my minimum lease payment or future lease payment is 30,000 rupees. You are not saying that my future lease payment is 35,000 rupees, because 5,000 rupees is for maintenance services, for which the lessor is giving you an additional goods and services. It is a separate non-lease component. But in this case, this entire 2 lakh rupees is the fixed lease payment, right? Very good. Illustration number 21. In substance fixed lease payment, entity P enters into a 5-year lease for office space with entity Q. The initial base rent is 1 lakh rupees per month. Rent increased by greater of 1% of entity P generated sales or 2% of the previous rental rent. rental rate on each anniversary of the lease commencement date. What are the lease payments for purpose of measuring lease liability? Tell me. Sorry. Tell me. Guys, the initial base rent is 1 lakh rupees per month. Rent increase by higher of 1% of fees generated sales. If the question would have stopped only by till this extent, that rent increased by 1% of the entity's fees generated sales, in that case, this rent will not to be considered. The rent has to be considered only when it is variable rent is depending on the index or rate, right? In this case, it says that the rent increased by greater of 1% of entity fee generated sales or 2% of the previous rental rate on each anniversary of the lease commencement date. Since it is higher, it means minimum 2% of the previous rental has to be paid. Am I right? If the sales will be higher, of course, higher has to be paid, but minimum 2% has to be paid. So, sitting today, you are clear that if my today rent is 1 lakh rupees, at least I have to pay additional 2,000 rupees in the next year. Am I right? Because it is higher. If it would be lower, in that case, there is no in substance fixed payment activity. Even though the sales will not be there, this 2% minimum rent will be increased. Therefore, this minimum level of increase is in substance fixed lease payment. I hope you guys have understood fixed payment and in substance fixed lease payment. Bhaskar, have you understood? Purvi Ben, Viraj, Shubham, Janvi, Namrata, Rahul, Radhika, Mantha. Whether all of you have understood the concept of fixed lease payment, in substance fixed lease payment. Just relate the concept with the actual real life, right? You will be able to understand this concept very easily, I would say. Either you guys are living on rental basis or your friends are living on rental basis or you have given your premises on rental basis. Illustration number 23 on the basis of index or rate. An entity enters into a 10-year lease of property. The lease payment for the first year is 1,000 rupees. That is a fixed lease payment. Yeah. The lease payments are linked to the consumer price index. That is not a floating interest rate. If the CPI will increase, lease payment will increase. The CPI, consumer price index, at the beginning of the first year is 100. Lease payments are updated at the end of every second year, and lease payments are increased at the end of every second year. At the end of year 1, the CPI is 105. At the end of year 2, the CPI is 108. Right? So what should be included in the lease payment? In that case, it is a depending on an index. So what will be your in substance what will be your variable lease payment which has to be included in the future lease payment? 1,000 rupees will be increased by 108 divided by 100. 1080. This 80 rupees. 80 rupees is a variable lease payment, right? 1,000 is a fixed lease payment. 80 rupees is a variable lease payment, okay, which has to be considered. So at the end of the year 2, when the lease payment change, the entity update the remaining 8 lease payments of 2 rupees 1080 per year, right? So this 1080 will be for the next 8 years. Janvi is saying, sir, in illustration 21, if it's provide expected sales is 5 lakh, then what is the 1% of 5 lakh, Janvi? It is 5,000 rupees. So Janvi, in that case, you cannot say that, that is in substance fixed payment, because you have to be, when you're talking, that will be a variable lease payment. When you're talking about in substance fixed payment, just think about what is fixed. That is an estimate, right? You are saying that expected sale is 5 lakh rupees. That is an estimate. But on the inception date, you are considering future lease payment on the commencement date, right? At the time of inception of the contract. So when you're expecting today, Then what is your fixed payment, which is 1 lakh? What is in substance fixed payment? Minimum 2% of 1 lakh, right? Or if any variable payment is depending on an index or a rate, that has to be considered. Or any exercise price has to be considered, or penalty has to be considered, right? Or residual value guarantee given by the lessee has to be considered. If in actual, if the rent payment is higher, in that case, the differential will go to the P&L. It is like a variable lease payment, right? It go to the P&L. Is it clear? Okay. Now, friends, what is meant by interest rate? Interest rate implicit in the lease, right? Because why this interest rate is important? Because when you compute right of use asset or leasehold obligation, right? In that case, you have to discount it. You have to discount the future cash flows, right? So in the standard, there is a concept of interest rate, and it says that interest rate implicit in the lease is the rate at which the net investment in the lease from the lessor perspective, means present value of lease payment to the lessor plus present value of unguaranteed residual value is equal to fair value of the underlying asset plus initial direct cost to the lessor. So friends, for example, if I am an owner of the property, right, and the cost of the property is 1 crore rupees, market value of the property is 1 crore rupees, and my initial direct cost, let's say, if I have to purchase the property, I have to pay 5 lakh rupees registration charges, brokerage and commission, legal fees. So the total is 1 crore 5 lakh rupees. The total fair value of the asset plus initial direct cost is 1 crore 5 lakh rupees, right? If this fair value is equal to my rentals which I'm earning, present value of the rental which I'm earning plus the residual value, the unguaranteed residual value which is given to me, if that is equivalent, my fair value is equal to my present value of future lease rental, it means that that rate is an interest rate implicit in the lease, right? And let me give you a fact here. In Gurgaon, the price of the property has gone up and the rental has also gone up, right? Why? Because the lessor has to recover the money from the investment which he has done in terms of house property. So friends, standard says that interest rate implicit in the lease is a rate at which the investment by the lessor is equal to the earning to the lessor. That's all, right? If that rate cannot be readily determined, the lessee shall use the lessor shall use the lessee's incremental borrowing rate. If that rate cannot be easily determined, then the lessee's incremental borrowing rate has to be used for the purpose of discounting or the purpose of interest rate. Right? What is initial direct cost? That interest rate is a very theoretical concept. Just skip that, right? That interest rate, a concept which is given, it says that interest rate is a rate at which whatever investment the lessee has done, right? Whatever investment the lessee has done, which is like a fair value of the lease property, that should be equivalent to my present value of the future lease rentals, which I'm earning, right? So this rate is that this rate, interest rate should be that rate where if you are discounting your future lease payment, it will be equivalent to your fair value of the asset. Initial direct cost means those incremental costs which would not have been incurred if the lease agreement has not been finalized, means the lease had not been entered, right? For example, commission, brokerage, legal fees, lease documentation preparation cost, right? Payment to existing tenant to move out, consideration for a guarantee to an unrelated third party for residual value. These are the indirect cost, right? Initial direct cost. Why this concept is important, initial direct cost? Because in so many calculation, you have to add this initial direct cost as well, right? And when I'll discuss the accounting part, I'll discuss this part here. Okay, guys. Now, friends, we'll discuss the heart of the standard. We'll discuss the heart of the standard. And while discussing the heart of the standard, It is something which is new in Ind AS 116. It is something which has impacted the entire globe for lease accounting. That accounting treatment in the books of the lessee has completely been changed, right? So it's 8:16 now. Let's have a 5 minutes break and then we will continue and discuss the accounting treatment in the books of the lessee. Let's have a 5 minutes break. discuss the accounting part in the books of the lessee, right? Do you have any question so far? Do you have any question so far? Shall I move forward? So students, we have discussed the concept of interest rate implicit in the lease. What is that concept? The concept is the lessee, while using the discount rate, the lessee has to use the interest rate implicit in the lease. And how it can be calculated? It is that IRR, internal rate of return, which equalizes the lesser investment with the earnings. But many times, lessee is not able to know that how much is the lessor's earning, right? I mean to say, what is the fair value of the property? What is initial direct cost to the lessor? So these details are not available to the lessee. Then how come lessee will finalize the discount rate? In that case, standard says that, and for all practical purposes, right? What we are doing in industry. So for all practical purposes, generally the lessee is using the lessee's incremental borrowing rate. The lessee is using lessee's incremental borrowing rate. Okay. What is meant by incremental borrowing rate? For example, I am a lessee. I have entered into a contract for 10 years for a leasehold building. If I'll go and get a loan for 10 years, what should be the interest rate? What should be the incremental interest rate? So that interest rate is the incremental borrowing rate on which the discounting has to happen. Right? Initial direct cost is a cost which is incurred due to the entering into a lease contract, right? That initial direct cost is also needs to be considered while considering the lease payments, right? While considering the lease calculations. Now discuss the lease accounting, right? If we are discussing the accounting in the books of lessee, which is very critical, very important from examination perspective as well as real life perspective. Let me explain you this thing. Friends, accounting in the books of the lessee. The lessee has to recognize a right of use asset, and I have told you in the books of the lessee there is no operating lease, no operating or no finance lease, right? No operating, no finance lease, single lease model. And the lessee has to account right of use asset, and lessee has to credit leasehold liability. Now the question arises, what accounting entry the lessee need to pass, right? Number one, the lessee has to debit right of use asset debit. Okay. Let's say the right of use asset will be debited by, I'll not take the amount here, to lease liability. And this lease liability is nothing. It's a present value of future lease payments. Present value of future lease payment after the commencement date. Present value of future lease payment after the commencement date, because the accounting has to happen on commencement date. For example, the present value of the future lease payment at commencement date is, let's say, 1,000 rupees, right? To lessor account or oblique advance rent, which you have paid before commencement date. Paid before commencement date. Friends, for example, in the example of the lease rent, in the example of the lease contract, which I have entered with Namrata on 28th of February, right? Yesterday's example. She has occupied the property from 1st April. The commencement date is 1st April. The inception date is 28th February. She has paid me advance rent of 20,000 rupees on 28th February. Right? So what is the accounting entry of that advance rent in the books of the lessee? What accounting entry Namrata will pass? She will pass advance rent account debit or Mr. Alok Garg account debit to bank account, right? She has paid the money and she will create an asset for that. Why? Because she has not started using the asset, but she has paid an advance. But at the commencement date, what accounting entry she will pass? At the commencement date, she will debit right of use asset. She will credit the future lease payment on the basis of present value, right? And whatever advance she has given to me, she will credit that advance rent. Or if she has debited my name earlier, she will credit my name, right? Right? Because this advance will go into a different asset, which is right of use asset, right? So to lease liability, which is present value of future lease payment, to lessor or advance rent for any amount which is paid before commencement date, let's say it is 500 rupees. To bank or cash for what? For initial direct cost. Initial direct cost. This initial direct cost paid by the lessee will also be capitalized in the right of use asset. For example, while entering into the contract, Namrata has paid me, not me. Namrata has paid 5,000 rupees to the security broker, to the real estate broker, and she has also paid 1,000 rupees for stamp papers. So 6,000 rupees is the initial direct cost, right? So this initial direct cost amount has to be credited bank because you have paid. So bank will be credited, cash will be credited, and right of use asset will be debited. Right? For example, it is 100 rupees. Two, asset retirement obligation, provision for asset retirement obligation, provision for site restoration obligation, right? And this provision has to be calculated as per Ind AS 37. Ind AS 37 is a standard which talks about provisions, contingent liability, and contingent asset. What is that? Let me brief you. And let me explain with the help of this example all these four facets of this accounting, of this right of use asset entry. I am a chartered accountant, right? And I run a practicing firm, for example. I entered into a contract to occupy office premises on 5-year lease basis, right? And before commencement date, I have paid 20,000 rupees. After commencement date, in the next 5 years, I'll pay 1 lakh rupees rental. I will pay 1 lakh rupees rental every year, right? And at the time of entering into a lease contract, I have paid 50,000 rupees to my broker, 10,000 rupees to lawyer, and for stamp papers, right? And when I occupied this office, when I got this office, I have spent some leasehold improvement in that. I have done some partition and etc. etc. Lessor has said that, Mr. Garg, whatever you are doing, I don't have any problem. But after 5 years, you have to give me the premises in the same condition in which I have given it to you. What does it mean? It means whatever leasehold improvement I have done, I have to restore this place in the same condition, right? I have to restore this place in the same condition. Number one. Number two, I will have to incur some dismantling cost, some site restoration cost, right? And why I'm incurring these costs? Because today I'm incurring into some expenses. That is why I'm incurring into some this cost. So friends, standard says that, and same concept was there in property, plant and equipment standard as well. The only difference is the standard says that whatever obligation you are obliged to do in terms of your site restoration obligation or asset retirement obligation in case of a leasehold premises, you have to credit the provision on the basis of present value of the future estimated payments and debit the asset. If it is a PP, you have to debit PP. If it is leasehold premises, you have to debit right of use asset, right? For example, I have estimated that after 5 years, I have to incur a cost of rupees 500, but the present value today is, let's say, 200 rupees. So I have to credit asset retirement obligation on the basis of present value at 200 rupees. So what is the total? 1500, 1600, 1800. So right of use asset will be debited by 1800 rupees and lease liability on the basis of present value of future lease rental will be credited by 1000 rupees. Lessor account or advance rent will be credited by 500 rupees. Initial direct cost paid, bank or cash has to be credited by 100 rupees and asset retirement obligation provision has to be credited by 200 rupees. I hope this entry is clear to everyone, guys. I hope this entry is clear to everyone. I hope this right of use asset accounting is clear to everyone. Yeah. Initially, in the books of the lessee, right of use asset has to be recognized and lease liability has to be recognized. Right. Right of use asset is the total of lease liability on the basis of present value of future lease payments to lessor or supplier if any lease payment is made on or before the commencement date, to bank or creditor if any initial direct cost incurred by the lessee, to provision for dismantling or removing of the cost, estimate of cost to be recognized only when lessee incurs an obligation for these costs. Is it clear? Is it clear, guys? Oh, just give me a second. Yeah, let's discuss this question. Illustration number 27. Then I'll move forward and we'll discuss some exemptions also. Then I'll do the practical solving of some case studies as well. Entity L enters into a lease for 10 years with a single lease payment payable at the beginning of each year. At the beginning of each year. Please write down. In your examination, you have to be a bit cautious about what is written in the question, whether it is beginning of the year or it is end of the year. It is very important. Why? If a annual payment of rent is made at the beginning of year, what is the present value factor for the first payment? What is the present value factor for the first payment? If the discount rate is 10%, the rent agreement is for 5 years, the lease is for 5 years, right? And what you are doing, the lease payment is for 5 years, and what you are doing, you are paying the rental on annual basis. You are paying the rental on annual basis. Okay, you are paying the rental on annual basis, but the rental is paid at the beginning of the year. The rental is paid at the beginning of the year. So what is the present value factor for the first payment? What is the present value factor for the first payment? It's 1 because the rent is at the beginning of the year. It's 1, right? What is the present value factor? If it is at the end of the year, then it is 1 divided by 1.1, which is 0.909. So in the examination, it is very important to understand that whether it is at the beginning of the year or whether it is at the end of the year. It is very important to understand, right? Is that clear? Is that clear, guys? I hope it is clear to all of you. Yes. So let's discuss this case study. Entity L enters into a lease contract for 10 years with a single lease payment, payable at the beginning of each year, means 10 payments and beginning of each year. The initial lease payment is 1 lakh rupees. Lease payment will be increased by the rate of LIBOR each year. LIBOR means with an index, London Interbank Offer Rate. It is just like an index. At the date of commencement of the lease, LIBOR is 2%. So 1 lakh rupee is my fixed rent. 2% on 1 lakh is my in substance fixed lease payment. Assume that interest rate implicit in the lease is 5%. How lease liability is initially measured? At what value lease liability is initially measured? Friends, please tell me if my Excel file is visible. And here I'll tell you that how this calculation has to happen for the lease rent. Please tell me if my Excel file is visible, guys. I hope it is visible now. I hope it is visible now. Yes. This is illustration number 27, where we need to talk about the lease liability in illustration number 27 of ICAI study material, right? Of ICAI study material. And the total lease term is 10 years, right? First of all, year. And what is the year? Year is total 10 years are there, right? Total 10 years. Then your lease payment. Then your lease payments are there. And what is your lease payment? In the first year, it is 1 lakh rupees. In the second year, it will be increased. It will be increased by how much? It will be increased by 2% every year. So 1 lakh multiply by 102%, right? In the next year, it will be again multiplied by 102%, right? So on and so forth. This will be your total 10-year lease payment. This will be your total 10-year lease payment. Then there is a discount factor, present value factor at the rate of 5%. The 5% is the interest rate implicit in the lease at the rate 5%. And what is the payment has to be made at the beginning of every year. Annual lease payment is at the beginning of every year. It means for the first payment, what is your present value factor for the first payment? It is 1 only, right? It is 1. And what about next year? 1 divided by 1.05, sorry. 1 divided by 1.05, right? Is that clear? 1 divided by 1.05. Just a minute. Yes. Again, for the next year, again, this divided by 1.05, right? So on and so forth. You will find the discount rate for all the 10 years, right? Then your present value of lease payment, right? Present value of lease payments. Lease payment is A, present value factor is B, and this is A multiplied by B. Right? This is the total. What is the present value of the future lease payment? What is the present value of the future lease payments? 887.51. So initially the lease liability has to be measured at 887.51. What is the accounting entry? This is the accounting entry at the commencement date. The accounting entry will be right of use asset account debit to leasehold liabilities. Right? What is the value? The value is 887.51. I hope this is clear to all of you. I hope it is clear to all of you. Let me know if you have any question. Yeah. Whether this calculation of lease liability is clear to all of you. If you guys are well versed with accounting standard 19, this is just finance lease accounting. That's all in the books of the list, I would say. Bhaskar, is it clear? Janvi, Namrata, Viraj, Mansa, Rahul, Radhika. Is that clear? In case of every lease, now you need to calculate right of use asset and you need to calculate the leasehold liabilities for every lease, right? for every lease. Sir, do we have any exemption? Yes, there are two exemptions. Okay, there are two exemptions. Let me go to yes, we discussed this part. Now there are two exemptions to the lessee for this entire discounting, accounting, right of use, leasehold obligation. The lessee has two options, right? Two exemptions. If there is a short-term lease, or there are low value leases, in that case, the lessee can simply do the rent accounting, which lessee was doing in the old accounting standard. Means lessee is not required to compute the lease liability on the basis of present value of future lease payments, and the lessee is not required to recognize right of use asset, and lessee will accrue the rent in the P&L as and when it gets accrued. Okay. So the lessee can choose the exemption. Sir, is it mandatory that the lessee will not do the lease accounting, I mean to say right of use asset and discounting of future cash flows for these two items? It is not mandatory. The lessee can have an option, right? It is optional accounting, but exemption are given, right? A lessee can opt for exemption from all the above treatment for a class of underlying asset to which the right of use asset belongs, and recognize the lease payment on straight line basis over the period of use or other systematic basis, right? Friends, what is meant by short-term leases and what is meant by low value leases? Short-term leases mean any lease period of 12 months or less, any lease period up to 12 months or 12 months is considered as a short-term lease, Now, friends, I'll give you an example and you need to tell me whether it is a short-term lease or not. A lessee has entered into a contract for a lease for a period of 18 months, for a period of 1.5 years, 18 months. Lessee has a termination option after 10 months. Lessee has a termination option after 10 months. Means in the last 8 months, the lessee can walk away from the contract, right? And lessee is reasonably certain to avail the termination option. Lessee is pretty sure that yes, he will avail the termination option and he will terminate from the contract after 10 months. You need to tell me what is the lease term in this scenario. What is the lease term in this scenario? Yes, Radhika, you're right. It is 10 months only. Why? Because he is, I have not said that he is reasonably certain that he will not avail the termination option. I have said that he is reasonably certain that he will avail the termination option. He means he will terminate the contract. When he will terminate the contract, it means what is your non-cancelable period? What is your lease term? Your lease term is equal to 10 months only. Your lease term is equal to 10 months only. In this case, whether it is short-term lease or it is long-term lease. Yes, it is a short-term lease. So in this case, the exemption can be availed and the rental can be directly debited into the P&L like our earlier AS 19 operating lease accounting. The rental can be debited to the P&L and cash can be credited. There is no requirement to debit right of use asset. There is no requirement to credit leasehold liability. There is no requirement to compute the present value of the future lease payments, right? Second example, the lessee has entered into a contract for 1 year, 12 months, right? With a renewal option of 3 months, another 3 months. Lessee is reasonably certain that he will avail the renewal option. In this case, what is the lease term? Is it a short-term lease? You're right, Rahul. It is 15 months. It is not 12 months. It is 15 months. Why? Non-cancelable period is 12 months plus optional renewal period if lessee is reasonably certain to avail that option, right? So it is 15 months and hence it is not a short-term lease. You cannot avail the exemption of right of use asset and leasehold liability accounting. Yes, it is not a short-term lease. Very good. Very good, guys. And I've seen a lot of participation since morning, right? A lot of participation since morning from all the participants. Once you understood, first you need to assess the lease period, right? And what is the definition of lease period? Non-cancelable period plus rent-free period plus optional renewal period if lessee is reasonably certain to avail the option, plus optional termination period if lessee is reasonably certain to not to avail the termination period. And if that period is 12 months or less, then it is a short-term lease. Otherwise, it will be a long-term lease, right? And exemption can only be provided on the short-term lease. A lease that contains a purchase option is not a short-term lease. For example, the company has entered into a car lease for 10 months. And at the end of the 10 months, there is a purchase option given to the lessee, right? And the lessee is reasonably certain to avail that purchase option, and the purchase option is available. If a purchase option is available in any lease, in that case, it will not be a short-term lease, right? Because the asset will belong to the lessee largely, okay? So standard has said that, please remember, in your examination, the question may be asked where the period is 11 months only, 10 months only, but a purchase option is provided in the question, right? And the question will trick you. The question will, the question will trap you that it is a short-term lease. You need to think about it. You should not only go by the term. You should think about it. Since purchase option is available, it means the asset will always be with the lessee, and hence it is not a short-term lease, right? The election shall be made by class of underlying asset to which the right of use relates, right? Friends, and this short-term lease exemption, for example, you have taken a building on a lease basis. You have taken a machinery on a lease basis, right? You have taken a land on lease basis. And there are 5 building, 5 machinery, 5 land. So whatever exemption you will avail by the class of asset basis. For example, there are 5 building, okay? And out of 5 building, there are 3 building. There are 3 building which are, let's say the 3 building are having a lease of 10 months, 11 months, and 12 months, right? So you cannot say that I will only avail the exemption for the building where 11 months period is there. For 10 months and 12 months, I will not avail the exemption. So standard says that if you will avail the exemption, then you have to avail the exemption by the class of asset wise. Like in this case, if you are availing the exemption for one building, you have to avail the exemption for all 3 buildings, right? Why I'm saying 3 buildings? Why I have not said 5 building? Because the 2 building are having a lease period of more than 12 months. Yes. So is that clear, guys? 3 things. Is that clear? Period should be 12 months or less. Purchase option should not be there, right? And this short-term lease exemption should be as per the class of asset. Purvi Ben has summarized the lease period, which is NCP, RFP, ORP, OTP. Very good. Class of underlying asset means the asset. Class of underlying asset is defined in Ind AS 16, property, plant and equipment. And it says that class of asset means those assets which are having a same nature and similar use in an entity's operations, right? For example, office building are one class of asset. Factory building are one class of asset. Office building is used for administration purposes. Factory building is used for production purposes. Furniture and fixture is one class of asset. Land is another class of asset. Machinery is another class of asset. Aircraft is another class of asset, right? Office equipment is another class of assets, right? Clear? Clear in mind or clear from mind? What kind of clarity is there? In mind or from mind? Yes, let's discuss this illustration number 1 for short-term leases. A lessee enters into a lease with a 9-month non-cancelable term with an option to extend the lease for 4 months. The lease does not have a purchase option. At the lease commencement date, the lessee is reasonably certain to exercise the extension option because the monthly lease payment during the extension period are significantly below market rate. 9 months is a non-cancelable period plus 4 months is the ORP. 9 months is NCP. In this case, 9 months is NCP. 4 months is ORP, optional renewal period. And there is a reasonable certainty to avail that option. So in this case, the lease term is 13 months. So is that a short-term lease? Answer is no. Assume the same facts as scenario A, except at the lease commencement date, the lessee is not reasonably certain to exercise the option because monthly lease payment during the extension period is at the market rate. And there are no such factor which says that there is a reasonable certainty that the lessee will avail the option. Will your answer be different in this case? Of course, yes. In this case, the non-cancelable period is 9 months and ORP, optional renewal period, is 0 because reasonable certainty is there. So the total lease period is 9 months and hence it is a short-term lease. Right? So we discussed short-term lease. Now what is meant by low value lease? When this standard was drafted, right, by International Accounting Standard Board, a question was asked to the board or accounting setters, right? And what question was asked? Let me tell you. A company like Reliance Industries Limited, which is having a pan India presence, a company like Bharti Airtel, a company like L&T, a company like TCS and Infosys, which have a global presence. So the lease is like a you know, it's a attitude or it's a habit in a day-to-day life of a business operations. So when you go to any company, right, and I'm sure that you all are pursuing your articleship or you have completed your articleship, you must have visited some offices and you have seen that the office building are on a rental basis, the warehouses are on a rental basis, the godowns are on a lease basis, the guest house are on a lease basis, and even the companies are taking the cars on a lease basis. And when you go to the offices, you must have seen the vending machines. Have you seen the vending machines for tea or coffee? CCD vending machines. Have you seen the vending machines for tea or coffee? Tea machine, coffee machine. Have you seen that? Some office equipment like refrigerator, even the printers are also taken on a lease basis. Computer, laptop, printer, tablets, these are also available on a rental basis, lease basis, right? Now the question arises, let's say a big company which is just taking these items on a lease basis, very low value, very small items on a lease basis, right? Whether for these items as well, we need to do this right of use asset and leasehold liability accounting. I mean to say, we need to estimate the future lease payment. We need to estimate the discount rate, interest rate, and then we need to compute the present value of future lease payments. And then we need to debit the right of use asset and credit the lease liability. Whether I'm supposed to do all this stuff, because if I'm having 50 offices in India, I do understand if all these 50 offices are on a lease basis, these are the significant value item, right? Because if you have taken an office on a lease basis, the lease rental will be significant, the value of the property will be significant. But in every office, just you have taken some tea or coffee vending machines, it is not a material item, it is not a significant item, right? If you have taken some printer on a lease basis, it is again not significant, not material. Guys, are you able to understand me what I'm trying to explain you? Right? I am showing you a picture from the real life perspective so that you will be able to retain the concept in your mind. What happens in that case? The standard has given you some exemption. Short-term lease exemption, we are very much clear. If something which is within 1 year, then why two? Then why we need to do all this discounting accounting, right? So that is pretty clear. The standard has also given you an exemption for low value leases. And it says that underlying asset can be of low value if both the condition will be satisfied. It says that if it is a low value asset, then you are not required to do this ROU and leasehold liability accounting. What you can do, you can simply accrue the rent in the P&L and recognize the rent in the P&L and move ahead in your life. Like you were doing the operating lease accounting in AS 19, in the same manner, you can do this accounting also. It says that the lessee can benefit from use of the underlying asset on its own or together with other resources that are readily available to the lessee, and the underlying asset is not highly dependent on or highly interrelated with other assets. Just forget about these concepts. Remember only one condition, that the asset should be of low value, like computer, printer, laptop, tablet, furniture fixture, office equipment. These are considered as a low value items. These are considered as a low value item, right? Value of an underlying asset to be assessed based on the value of the asset when it is new, regardless of the age of the asset being leased. Sir, if the printer which I have taken on a lease is 5 years old, should I consider the market value of the printer for assessing whether it is a low value item, or should I consider the market value of the new printer? For example, in my company, I have taken a printer on a lease basis, and the printer is HP XYZ1010 printer model number. It is a 5-year-old printer. I'll go to the Amazon or I'll go to online and check what is the price of HP XYZ1010 printer as of now. The price is 10,000 rupees. So I have to consider the price of the new asset while considering whether it is a low value or whether it is not a low value, right? So friends, if there are low value item, in that case, these items are exempted. These leases are exempted for this detailed accounting of right of use asset and leasehold liability. What could be the example of low value asset? Tablet, personal computer, office furniture, telephone, coffee machine, vending machine. These are the examples of low value, right? These are the example of low value assets. Sir, this is very subjective. Friends, what companies do, companies make a policy for that. For example, Reliance, it's a big company. The top line is lakhs of crores. The bottom line is 40,000 crores, right? For them, even a small cars could be a low value item, right? So they are making or they are framing a policy, let's say any item whose value when it is new is up to 5 lakh rupees, then it will be considered as a low value asset. But you can understand, if Reliance is having offices go down, the value could not be less than 5 lakh rupees. It could be in crores. If they have taken a leasehold premises in Mumbai, it will be in crores. In Delhi, it will be in crores, right? So if they are taking 1,000 square feet of office in a small area, I mean to say remote area, still the value could be 20 lakh, 30 lakh, 40 lakh rupees, right? So low value leases, this has to be considered when the item is new, the value has to be considered accordingly. And the company has to make a policy that what could be the low value, right? And this assessment has to be performed on an absolute basis. What is the totality of that, right? I hope this low value part is also clear to all of you guys. Is that clear? Is that clear? There is one exception, like in short-term leases, we have read that if in the short-term lease, if the purchase option is there, then it will not be a short-term lease. Likewise, in low value leases, if the sublease option is there, then this is not considered as a low value leases. I mean to say, this will not be considered as an exception for low value leases. The exception for the detailed accounting of Ind AS 116 is not available to the low value leases, right? If the lessee sublease an asset or expect to sublease an asset, the head lease means the main lease does not qualify as a lease of low value asset, right? Is that clear? For example, the company has taken some printers on a lease basis and the company has subleases those printers. In that case, this lease of printer which the company has taken is not considered as a low value leases, right? Is that clear? So guys, as a notes, you need to write that in the accounting, in the books of the lessee has to recognize right of use asset on the basis of leasehold liabilities. Lease liability is measured initially on the present value of the future lease payments, right? And there are two exemptions from this accounting of right of use asset and lease liabilities. There are two exemptions in Ind AS 116, short-term leases and low value leases. If the lease is short-term in nature or if the lease is low value in nature, in that case, you can just do this P&L accounting where you can accrue the rent and you can pay the rent. As simple as that. Nothing, no discounting, no present value is required. What is a short-term lease? A short-term lease is a lease where the lease period is 12 months or less. Lease term. What is a lease term? NCP, RFP, ORP, OTP, right? And if the purchase option is available, the lease will not be considered as a short-term lease. Second, low value leases. Low value leases are those leases where the value of underlying asset is insignificant, immaterial, or very low. Example could be tablet, personal computer, office equipment, furniture, even in some cases car as well. Okay. So the low value leases policy has to be made by the company to identify that what is a low value leases, right? And for identifying the low value, the value has to be checked from the perspective of the new item. If company is subleasing or subleasing option is available or the company expect to sublease this low value leases, in that case, the exemption of low value lease will not be available and the company has to recognize right of use asset and lease liability for this low value leases. I hope it is clear to all of you, friends. I hope it is clear to all of you. Yeah. Let's discuss illustration number 28, how to measure a right of use asset, right? Entity Y and entity Z. Entity Y and entity Z. Namrata, I have summarized this. Okay. Entity Y and entity Z execute a 12-year lease of a rail car with the following terms on January 1st, 2016. What are the terms? Lease commencement date. Accounting has to start from the lease commencement date. The lease commencement date is 1st February 2016. Right? Entity Y. So you have to consider the lease term from the commencement date. Entity Y must pay entity Z the first monthly rental payment of rupees 10,000. The first monthly rental payment of rupees 10,000 upon execution of the lease. So January 1, 2016 is the inception date. February 1, 2016 is the commencement date. And entity Y has paid 10. Sorry. Entity Y has paid the first monthly rental payment of 10,000 upon execution of the lease. Entity Z will pay, the lessor will pay entity Y 50,000 rupees cash incentive to enter into the lease payable upon lease execution. It is a reverse thing. The lessor is paying to the lessee. The lessor is paying to the lessee. Right. So why lessor will pay to the lessee? And I'll give you a real life example here. Have you seen a new mall? Have you seen a new mall? Any new mall? Generally what happens when a real estate builder or a real estate company is constructing any new mall, right? What they are doing, they are looking for a big outlet. They are looking for their anchor customer. What is meant by anchor customer? Anchor customer are those customer who anchors first, means who first enter into the mall, right? They are the first, there are first few persons, first few entities who start coming to the mall. For example, Big Bazaar. Although nowadays Big Bazaar is no more, but for example, Big Bazaar, DMart, PVR, right? Lifestyle, right? Lifestyle. Okay. Max, Reliance, Fresh, Reliance Digital. So these are the big outlets. These are the kind of a departmental stores. And lessor gives so many incentive to the first few lessees, right? Why? Because lessor has an inherent benefit out of that. If these kind of outlet will come, like Chroma, Tata Chroma, Vijay Sales, if these kind of big outlet will come into the mall, the footfall will arise, right? A lot of footfall will arise. And the other outlet will also come like apparels, food court, right? So these outlet helps in taking other outlets as well, right? In taking other outlets as well. So friends, sometimes the lessor is giving some lease incentives. And let me talk about another example. At the time of COVID, Airport Authority of India has given lease concessions, have given rent concessions, incentives to the lessees, right? So if a lessee, if a lessor is giving some incentive, it is also form part of your right of use asset. 10,000 rupees a payment made by the lessee. 50,000 something which is received by the lessee in terms of incentive. 1,000 is initial direct cost, which is payable on the commencement date. Entity Y calculate the initial lease liability to the present value of the lease payments discounted using its incremental borrowing rate, because the rate implicit in the lease could not be readily determined. The initial lease liability is 8,50,000. Friends, how would lease company measure and record this lease? At what value the lease asset, right of use asset, will be recorded? Friends, I have told you 4 things. What are the 4 things? What are the 4 things? To lease liability, minimum present value of future lease payment. What is the present value of future lease payment? It is 8,50,000 in the question. What is the amount which the company has paid? 10,000 rupees. What is the incentive the company has to be received? 50,000 rupees. Right? And what is the initial direct cost? It is 1,000 rupees. In this case, right of use asset will be debited by how much? Right of use asset will be debited by 8,50,000 plus 10,000 minus 50,000 plus 1,000. Right of use asset will be debited by 8,11,000. Right? 8,11,000. What is the accounting entry? What is the accounting entry? What is the accounting entry? Right of use asset account debit, 8,11,000 to lease liability, 8,50,000 to bank, initial direct cost 1,000, right? To the payment before commencement date, lessor account or advance rent 10,000, lease incentive receivable account debit, which is 50,000. This is how this accounting has to be done, right? And when the lease incentive will be received, bank account debit to lease incentive account. I hope it is clear. This illustration is clear. This illustration helps you in understanding this right of use asset, leasehold liability, right? We have discussed illustration number 27 in detail in my Excel file, where I have shown you the calculation. There is a difference in some values, right? It could be due to the decimals. So whatever you will do, that is okay in the exam. Don't worry about that. Now coming to the subsequent measurement, right? Friends, in PPE, what you are doing? In PPE, you are recognizing the PPE, property, plant and equipment, on the cost model, right? but the subsequent measurement will be happening on the cost or revaluation model, right? Likewise, friends, in your Ind AS 116, the lessee has to recognize right of use asset and credit lease liability for all the leases except short-term leases and low value exemption, right? Now the question arises, if the lease period is 10 years, right? And you have capitalized the right of use asset for rupees 1 lakh, how this 1 lakh rupee will be, how this 1 lakh rupees right of use asset will be zero, how this entry will be reversed. Lease liability, we understand that you will have a lease liability in the beginning. What you will do, for example, at the rate of 5%, at the rate of 5%, and let me take you this thing. I hope my Excel file is visible. I hope my Excel file is visible, guys. In the same example, right? There is an asset, and there is a liability, and the period is 10 years. There is an asset of right of use asset of 88751. There is a liability of 88751. If I would have done this operating lease accounting in AS 19, no balances, no balance sheet balances will be there, right? Now the question arises, at the end of 10 years, how this asset and liability will be square off. So friend, let's talk about the asset. Asset, year. What is the value of the asset? What is the value of the asset? The value of the asset is 88751. This asset needs to be depreciated or amortized over a period of the lease life, over the lease period, right? What is my per annum depreciation? My per annum depreciation is 88705 is my per annum depreciation, right? The total accumulated depreciation is 88751. End of every reporting date, you have to pass an entry depreciation account debit, account debit to right of use asset or accumulated depreciation account, whatever, to ROU oblique accumulated depreciation. This will the accounting entry which has to be passed at the end of every year. He understood that this asset will be zero by depreciation at the end of the 8 years. But what happens? What happens for the liability? How this liability will be squared off? Again, let us prepare a payment schedule for a liability. Okay. What is your opening liability at the beginning of the year? What is your opening liability? Your opening liability is 88751, right? 88751 is your opening liability. Sorry. Your payment, lease payment, interest, closing balance. Your lease liability is 88751, but in this question, you are paying the payment in the beginning. Okay. So you are paying the payment in the beginning. You will debit this lease right of use asset by 88751 and credit the lease liability by 88751. And at the same time, on the commencement date, you have to pay 1 lakh rupees, right? You have to pay 1 lakh rupees. What is the payment? The payment is at the beginning of the first year, it is 1 lakh rupees, right? At the end of the 1 year, at the end of the first year, what should be your interest? Because the payment is happening at the beginning, right? And that is why the interest will be at the rate of 5% because you have discounted at the rate of 5%. So interest will be also at the rate of 5%. What is the interest rate of 5%? 88751 minus 1 lakh multiply by 5%, right? This will be your interest. This will be your interest, right? This will be your interest. Your closing balance will be this plus this plus this. In the second year beginning, this will be your opening balance, right? And what is the lease payment in the second year? Beginning of the second year, it is 1,02,000. 1,02,000. Your interest at the rate of 5% is 35,000. Closing balance is this one. Again, this will become the opening balance in the third year. In the third year, the payment will be 1,04,040. This is your interest. This is your closing balance. So on and so forth. By the end of the 10 years, you will find this calculation, right? You will find that at the end of the 10 year, in the beginning of the 10th year, the liability was 119,509 and you will pay 119,509 and nothing is payable now. This liability will become zero at the end of every year. For the asset, you need to pass a depreciation entry at the end of the every year at the time of subsequent measurement. For liability, what you are required to do? You are required to make an entry, interest account debit to lease liability, right? Like in the first year, second year, third year, these are the interests which are going to be recorded, right? And with the interest, liability will increase. At the same time, you have to pass an entry, lease liability account debit to bank account. Since you are paying the rent every year, this is how your liability will be reduced, right? And your liability will be unwinded by the, because the liability is present value. So whatever discount rate you have used for taking it to the present value, it has to be unwinded, and thus this interest cost has to be recognized, right? And the lease rental has to be paid. With the help of this calculation, are you guys able to understand this right of use asset subsequent measurement and the leasehold liability subsequent measurement? Let me know if you have any doubt. Is that clear, friends? Is it clear or not clear? Is it clear or not clear? Yeah. Guys, I'm waiting for the answer. Clear? Yeah. Very good. So friends, as far as subsequent measurement is concerned, the right of use asset can be measured either by cost model or by revaluation model. Ind AS 116 says that you have to apply Ind AS 16 property, plant and equipment for the subsequent measurement. What is the cost model? So cost minus accumulated depreciation minus accumulated impairment loss. So you have to determine the net block carrying value by reducing it by the depreciation. You have to charge the depreciation. If impairment is there, you have to charge the impairment. Okay. And then you need to get the value down for this right of use asset. And if there is change in the lease term, or if there is a change in the scope of the lease, in that case, you have to remeasure the lease liability and take the impact in the right of use asset. We will discuss it later on, right? But just to summarize and let you explain, the right of use asset has to be remeasured either at the cost model or the revaluation model, right? On the reporting date, the depreciation entry has to be passed. The depreciation has to be recorded on the right of use asset. And if there is an impairment, the impairment is also required to be recorded, right? What is the life on which the depreciation has to be passed, on which the depreciation has to be charged? It is a useful life of the asset. For example, the entity has entered into a lease of an asset for a period of 10 years. The life is 15 years. The life of the asset is 15 years, but the lease period is 10 years. Number one, the entity has a purchase option. In that case, the depreciation has to be charged on the basis of 15 years. Number two, the entity does not have the purchase option. In that case, the right of use needs to be depreciated over a period of 10 years, which is a lease period, right? The depreciation has to be charged on straight line method basis. And you need to apply Ind AS 16 property, plant and equipment to apply the concept of this depreciation impairment on ROU asset. Coming to the revaluation asset, in case right of use asset belongs to the class of PP to which the lessee chooses to apply revaluation model under Ind AS 16. For example, the lessee has 5 buildings. 3 buildings are self-purchased and 2 buildings are leased building. The lessee has decided to do the revaluation of this owned building, these 3 buildings. Standard says that if the lessee wants to do the revaluation of this 3 building, then the lessee is required to do the revaluation of right of use asset with respect to these 2 office building as well, right? Because it says that if you are doing a revaluation, then revaluation has to happen by a class of asset. And what is the class of asset? The office building is a class of asset. Thank you, Purvi. Thank you for such a nice feedback. And I'm glad that you guys are able to understand very smoothly. Lease liability has to be increased by interest charge, like I've shown you the schedule for entire 10 years, and decreased by the actual lease payments, right? Is that clear, friends? Expense recognition, of course, the lessee shall recognize the following item in expense for leases: depreciation on ROU asset, interest as a finance cost on the lease liability, and variable lease payment. Which variable lease payment? Which is not dependent on index or rate. You remember the Lakshmi Nagar example? If your friend will join this house, if he'll live in this house, I'll take 5,000 rupees extra. So variable lease payment which are not included in the lease liability. Impairment of the ROU asset. If there is an impairment, this will go to the P&L. So you understood the balance sheet presentation, right of use asset and lease liability. P&L presentation, depreciation on ROU asset, interest on lease liability, variable lease payment which is not on index or rate, and impairment expense. Yeah. Let us discuss this illustration number 30 as well, because lessee accounting is very critical. Entity ABC is a lessee. It enters into a 3-year lease of equipment. 3-year lease, it is not a short-term lease. Entity ABC agrees to make the following annual payment at the end of each year. See, this is a ICI study material question, and that is why this end is bold and underlined. In examination, it is not bold and underlined. So you have to be very cautious about applying the discount rate. 20,000 in year 1, end of the year. 30,000 in year 2. 50,000 in year 3. What is the total value of the rent? 1 lakh rupees. So it needs to be computed at present value. For simplicity purpose, there are no other element to the lease payment, like purchase option, lease incentive, initial direct cost, nothing. Discount rate is 12%, right? And entity ABC depreciate the ROU asset on straight line basis over the lease term. How would entity ABC do account for the said lease under Ind AS 116? Friends, first of all, what is the year? Year 1, 2, 3. What is your payment? What is your future lease payments? 20,000, 30,000, 50,000, and the payment is happening. And the payment is happening at the end of the year. So what is your present value factor at the rate of 12%? 12% discount rate is given. What is that? 1 divided by 1.12. Whatever comes, then again you have to divide by 1.12, and again you have to divide by 1.12. When you multiply this future lease payment with the present value factor, it gives you the total lease liability, and right of use asset will be credited by this lease liability. Friends, in this case, at the commencement date, entity ABC would initially recognize ROU asset and the lease liability of 77,364. But it was 1 lakh rupees. How come it becomes 77? Due to the present value factor. Year 1, 2, 3, payments are 20, 30, 50. Discount factor at 12%. 1 divided by 1.12. 0.8929 divided by 12 and 0.7972 divided by 1.12. This is the your lease liability. What is the accounting entry? ROU asset debit to lease liability 77,364. This ROU asset needs to be depreciated over a period of 3 years, right? And lease liability, interest has to be charged on this lease liability, like 77,364 multiplied by 12% minus 20,000. So this way, the closing of the last year will become opening of this year, and payment has to be made, interest has to be charged. In this case, you can see that payment is coming after interest. Why? Because the payment is happening at the end of the year. In my example, illustration number 27, payment was coming before interest. Why? Because the payment is happening at the beginning of the year. Right? Any doubt? Any problem? This is the depreciation. Every year the same depreciation is there because of this straight line method. Accounting entry is ROU asset to lease liability, interest expense to lease liability, depreciation to ROU asset. As simple as these are the accounting entries. This is one of the most important standard, I would say, and around with my experience and with my thought process, I can share that you will be having close to 8 to 10 marks question from this Ind AS 116. And this standard is very important from the real life perspective as well. If I'll interview any participants, I'll interview any candidate for financial reporting profile, I used to ask question from Ind AS 116, right? So this standard is important from exam perspective, interview perspective, and auditing and accounting perspective as well. Because lease is there in everyone's balance sheet, right? It is generally there in everyone's balance sheet. If I talk about Indus Tower Limited, which is a listed company, they have a right of use asset of close to 11,000 crores and they have a lease liability close to 13,000. I hope you guys have understood this thing. Yeah. So you can see this entire summary of the transaction. The cash payments are 20,000, 30,000, 50,000. And on the commencement date, there is a ROU asset in the balance sheet and lease liability. And every year, what is going into the P&L? Interest expenses, depreciation, and this is total expense. Every year, the value of the ROU asset and lease liability will go down. Okay. Is that clear? Friends, I haven't got the reference. I have not got the response from you guys except Purvi Ben or Namrata or Radhika and Rahul. Are you guys clear on this? Yeah. Am I audible or I'm not audible? Ashok ji, am I audible? Please write on the chat box. Because since last 5 minutes, I'm not getting the response from the participants. Okay. Okay. Very good. Yes, I got the response now. Let's conclude this session today. Otherwise, it will be, it will just cross your mind and it will be an overdose for the day. So today we have discussed, friends, what is meant by lease term and what is meant by the lease payments, right? And we discussed what is meant by interest rate implicit in the lease, and we discussed what is meant by initial direct cost. And we have discussed in detail the lease term illustrations, the lease payments illustration, and we have also talked about the initial recognition and measurement, subsequent recognition and measurement for the accounting in the books of the lessee, how this right of use asset has to be measured. It has to be measured on the basis of leasehold liability, how this lease liability is going to be measured, right? What are the variable lease payments? So we have discussed all these aspects today, right? So let's conclude the session today. And in the next session, I will be covering the remeasurement of lease liability I mean to say modification, and lesser accounting. Okay. In the last day, I will be covering sublease concept, sale and leaseback, and doing the revision for all the three classes, session number 1, 2, and 3. Rest assured, I will take a lot of practical example from annual reports, real life listed companies, lemon language examples, and I have a lot of case studies and illustration from ICI study material, which I will be covering in these 4 sessions. Thank you so much, guys. And let me look at the query box.